Growth is one term that's often used, but inflation, of course, is now another term that people use to describe how the central bank views what's happening in the economy. Do you think this would prompt the PBOC to do more to stem that red-hot growth?
I think the CPI data in July really hit a record in decade to 5.6, and the PPI decreased to 2.4. I think the PPI did have reflected the inflation trend in China, and the PPI just reflected the long-term Chinese overcapacity due to the high fixed asset investment. Maybe someone will argue that the core CPI still remains under 1%, but it does not mean that the inflation, I think, can be neglected. Because in China, there are no real core CPI, but a kind of a non-food CPI, which includes the energies and utility prices. But all these prices are highly regulated, which underestimate the core CPI. I think the CPI, the inflation, is really a kind of a hint of a beginning of the inflation triggered by the cost increase and huge liquidity, plus some part of natural disaster in China, as you can see. And I think the CPI will remain high around 5% in the next half year. The interest rate hike, I think it is possible in the next 2 months, but only the interest hike is not so effective as we can see. The main problem is that I think the reform of the current pure GDP incentive mechanism for the local government's performance is very critical, because if you don't change that, it is not so easy to avoid unnecessary fixed asset investment.
Gong Liang, why do you think then that the central bank is willing to live with higher CPI numbers in the second half of the year? I mean, why would they be comfortable at these levels and not want to step in to help bring it down a little bit?
The CPI, the central government said that CPI growth in July is a kind of a seasonal phenomenon, but I don't think so. Though there are some seasonal phenomena triggered by the pork price or say by the food price, but the CPI will still stay high, because the labor cost from the rural and the urban places really has triggered that problem, and the PBOC wanted to keep that CPI inflation not so high. I say their target is under 4%, but I don't think it's a very easy job, because you have to balance the RMB appreciation and inflation together to, in my word, to make Chinese products more expensive gradually. So it is not an easy job. It's a tough job for the PBOC to do in the next half year.
All right, there, Gong Liang, thanks so much for joining us. That's Gong Liang, a research analyst at Pvt Seymour Limited. Well, Pallinghurst Resources is withdrawing an order to buy up to 11 million shares of takeover target Consolidated Minerals. This is because of the softer equity market. Pallinghurst will continue with its